Are you looking to improve your trading skills? Welcome to Trading Lessons, an academy dedicated to helping traders succeed. In today's video, we're going to talk about the Fibonacci indicator and how you can use it to identify potential trading opportunities. The Fibonacci indicator is a powerful tool that can help you determine key support and resistance levels in the market. By plotting these levels, you can anticipate potential price reversals and make informed trading decisions. To use the Fibonacci indicator, first, identify a significant swing high and swing low in the price action. Next, draw the Fibonacci retracement levels from the swing low to the swing high, or vice versa. The most commonly used retracement levels are 38.2%, 50%, and 61.8%. These levels act as potential support or resistance areas where price could bounce off or reverse. Traders often look for confluence between Fibonacci levels and other technical indicators to increase the probability of a successful trade. Remember, the Fibonacci indicator should be used in conjunction with other technical analysis tools for better accuracy. Keep in mind that the Fibonacci levels are not magical lines. They are simply tools to help you analyze the markets. At Trading Lessons, we provide comprehensive courses on trading strategies, technical analysis, and more. Whether you're a beginner or an experienced trader, our academy has something to offer you. Together, let's unlock your trading potential and achieve financial success. Thank you for watching this video, and be sure to subscribe to our channel for more trading lessons and tips.